What's going on, guys? So we're going to take a little look around the market. I'm going to go through some tech stocks here, starting with Amazon. By the way, if this is the first time on my channel, thank you guys for visiting. Don't forget to hit the subscribe button on your way out. With that being said, we're going to take a look at Amazon. So Amazon has been trading in a range, stuck in a channel for the past 3-4 days, along with the NASDAQ 100, along with a lot of other stocks. So, that's not to say that there hasn't been aggressive moves to the downside as well as some aggressive bounces. But let me just kind of point out a very, very clear picture here. 29.72 to the downside, we've touched multiple times. This is seeming to act as a level of demand where buyers are comfortable stepping in on the stock short-term wise. And it's getting those little bit of relief bounces back up into the middle of the range. And anytime we can kind of clear out the middle of the range, we do drift higher to that top channel, which is 30.89. You can see we've touched it 1-2 times and almost made an attempt to test it here. Every time we kind of get up into the supply zone, we sell off, we come into demand, we kind of push higher, we get up into this supply zone, we sell off, and now here we come yet again into the middle of the range. If you're a newer trader, definitely, or you're someone looking for the extended move, you're looking for the bigger move, I would wait for either the next leg down or the next leg higher. So there's going to be an opportunity over 30.26 for a little bit of a trade back into 30.89, but I think the next leg higher is going to be a break and retest of 30.89, or the leg down is going to be that break of 29.72. Until one of those two levels is broke, I think that we can kind of just leave Amazon alone and kind of let it do its thing, let the play set up. These ranges are contracting, they're getting smaller and smaller, so something's going to give. Let's go ahead and take a look at AMD. AMD, same kind of thing here, 3 days, kind of stuck in this channel. We are at the bottom range of this channel here. Bottom of the range being 112.10. So if we do start to lose that 112 area, that potentially could spell another leg down for AMD. Obviously, I would expect the rest of the overall market to be selling off with that as well. You can see the little bit of a double top that we had here, as to be expected. Anytime we have a second test of a recent high and we cannot break it and create a double top, normally we tend to fall. But was I expecting AMD to fall from 119 all the way down to lows of around 112? No, maybe I thought it was 116, 115, maybe back to the middle of the range, consolidate and push higher. But with that being said, beggars can't be choosers, right? So 112.10 to the downside, 119, 120 to the upside. 120 would take us back into the channel of 124. Let's take a quick little look at Tesla. So Tesla here, I've got two channels set up here on Tesla. The upper channel over 875. Anytime we've cracked the 875 to the top side, we have had 10, 8-point run-ups, but they are very, very short-lived. So you can see here, big spike, push in volume. We get this high price of 889, and then we immediately sell back to the middle of the channel. We get this crack over 875. We push higher and immediately push back down. We push higher, immediately push back down. We push higher, we immediately push back down. So the point that I'm trying to make here is the next pass through of 875, I would look for a scalp play. As you can see, the run-ups are very, very aggressive. So there's a potential for a trade there, but just know that it's not going to be something that you're going to want to leave on the table overnight. Kind of take it as a day trade. I think that before we can really start looking at the bigger picture to the bull side on Tesla, we're going to need to get over 889, and we're going to need to break 890, retest that, come back into that zone, and then push higher. To the downside, we are trading down towards the bottom of the range here, bottom of the range being $843. If Tesla does start to lose 843, it is going to have room down for another leg. There is a potential scalp play here below 847 into 843. Again, on a stock like Tesla, when you're looking at 3, 4, 5 points, those moves are extremely quick. So if you do take part in those kind of moves, you need to make sure that you cover your position extremely quick, kind of just lock up your profits. Let's take a look at the triple Qs, the overall market for the NASDAQ 100 here. 350.93 is going to be those highs. 338 is still our bottom lows here. If I kind of just zoom out so we can see, look at this channel that we've been in. So every time we've been down in this 338, 340 range, we get a nice bounce. We come down, we get a nice bounce. We come down, we get a nice bounce. We are trading in the middle of the range. So, you know, trading environments are not the best right now. Markets seem very, very choppy because we're in the middle of a range. Anytime you're in the middle of a channel, you're stuck in between, you know, the supply and demand. You're going to get aggressive rallies, and then soon after they're going to be pulled. And then when you think stocks are going lower, they're going to catch support and reverse. So it's very, very hard to trade a market or to feel like you feel comfortable when the market is stuck in the middle of a channel. I would definitely wait for the 350.93 break on stocks before we start on the triple Qs, before we start buying stocks to the long side. And then before we really want to put on those big short positions, we're going to really either need to lose and violate the 338 and start putting in a new leg lower, or we're going to have to trade the ranges accordingly. So what does that mean to trade the ranges accordingly in a range bound market, which we've been for 3 going on 4 days? This is, you know, classic distribution cycle. This happens once every couple of months where we go into a 2, 3, 4, 5, 6 day distribution. Ranges contract, they get a lot tighter. With that being said, is down towards the bottom of demand is where you're going to want to cover your short positions and buy longs, and you're going to want to kind of ride those back up to the middle of the range. Anytime we get to the top of the range near 350 on the Qs, I would call it anywhere between 345, 346, and 350 is time to start covering those long positions and start kind of hedging and going short. Until we break over 350.93, you could essentially hold your short position. Okay. Until we lose 338, you could essentially hold your long position. That's just kind of the range that we're trading in. Obviously you want the best possible price, so you don't want to be buying long at 350 to have it trading at 340 in a couple of days. So make sure you're picking your spots accordingly, playing the supply and demand zones. Let's take a quick little look at Nvidia. So Nvidia, we can actually move this trend line here, 245.26, and we have a low of 231. So again, Nvidia in the middle of the range. You're going to start to notice a theme. All stocks right now are trading in the middle of a bigger range here. So you can see anytime we start coming up to the middle of the range, you might want to think about selling that position. We quickly break higher, and then we quickly pull back, and then we quickly break higher, and then we quickly lose this level. So this is a very, very choppy environment. This is very, very emotional. Okay, very, very emotional. Your ups and your downs, and your ups and your downs, and then realistically, we're not really doing anything. We're just kind of going sideways. What you want to see is something like this, right? Very, very boring, very orderly. You get up and then down, up and down. We don't want to see this. This is a completely different market. Okay, even this kind of market is easier to trade in. You know, the market's going to kind of correct your bad entries because the overall direction of the market is moving lower. The market is going to correct your bad entries because overall market is moving lower. In a market like that we've been seeing for the past 3 or 4 days, if you get in long here, well, then you're going to get destroyed and stopped here. If you start shorting here, well, then yes, maybe you make a little bit of money, and then you think, oh, you know, we're about to go lower, and then we ramp up. And then you close your position here because you think, you know, oh, here we go, we're going to break out, we're going higher, and then we roll over. So very, very tough environment to trade in. I hope you guys all found a little bit of value out of this video. If you did, please don't forget to hit that thumbs up button. Hit the subscribe to my channel. I will definitely see you guys all in the next trading video. Also, if you guys want to trade with me each and every single day live, join my Discord. That link is down in the description box below. If you guys are looking for a trading strategy, visit my website, evolutiontraders.com. I'll have you guys all set up so you can be a more consistent and profitable trader. Until next time, I'm going to see you guys all in the next one.